So what do you get when the dollar hovers near a 2-week low? Silver smashes fresh all-time highs and the Nasdaq tries to figure out whether the Fed is cutting rates or cutting the suspense. Well, I'll tell you. You get a Monday market session that feels less like the start of a new month and more like an episode of a December financial drama series. And yes, the plot twist this week might just involve a new Fed chair. No pressure, right? With that being said, trust me when I say before you place your next trade, watch this.
Why is fast trade execution a must? Because you're more likely to get the entry price you want and the exit price you want. Reliable, rapid, responsive. Join ATFX today and let's get you started.
Good morning, I'm Francois, your market analyst here at ATFX Africa, and welcome to your daily market brief, where each morning I break down the biggest market drivers across currencies, commodities, and indices, mixing fundamentals, technicals, and well, just enough logic to make sense of this wonderful, unpredictable financial universe that we like to trade so much. Let's kick things off today with currencies. And here we can see the dollar index is hovering around 99.4, near a 2-week low as traders gear up for what could be the final rate cut of the year, as markets are pricing in an 87% probability of a 25 basis point reduction next week, with expectations for more easing in 2026. Add to that a potential Fed leadership reshuffle, with Kevin Hassett currently seen as the frontrunner, and the dollar has its worst week in 4 months. Meanwhile, the Swiss franc sits comfortably strong at 0.8, supported by expectations that the Swiss National Bank will keep rates at 0%. Potentially until 2027. Rising inflation forecast and an anticipated economic recovery is boosted by the latest US trade deal. And on top of that, you can add the franc's defense appeal. So fundamentally, you've got a softening dollar meeting a stubbornly resistant Swiss franc. That's like showing up to a boxing match where only one fighter trained over the weekend. Looking at the charts, USD CHF rose slightly to around 0.804, edging up 0.2%, but the technical picture still leans bearish, and here's why. Price remains below the 50 EMA, indicating ongoing downside pressure. The pair continues to trade inside that bearish corrective channel as well, and key support is currently at 0.815. which has held quite firm, and that's what sparked the modest bounce that we can see on the chart at the moment. The RSI is flashing negative signals, trading below 50. So, traders, in other words, the market is trying to breathe, but it is still very much underwater. Moving over to commodities, silver is not just climbing, it's sprinting. This metal surged another 1% this morning above that $57 mark, hitting fresh all-time highs as supply concerns intensifies and expectations of US rate cuts gain momentum. Drivers here are including events such as the major CME data center outage, which caused unusual trading dynamics on Friday. Inventories at Shanghai warehouses levels are falling to near decade lows as well. Then markets are, as stated earlier, fully pricing in a December Fed rate cut amid softer labor data and dovish Fed commentary. And lastly, delayed US economic reports after the multi-week government shutdown are further amplifying the case for lower rates. So with lower borrowing costs and global supply tension, silver is getting the kind of spotlight usually reserved for, well, Hollywood's award season. Technically, this metal is on fire, but possibly overextended. trading around $57.09, well above the 100-period EMA, which is sitting at $53.50. The RSI sits at 74.4, showing deep overbought conditions. Price is currently hovering just below the 138% Fibonacci extension level, indicating stretched momentum. Initial pullback could be up to that support level, which is currently sitting at $56.50, which is also the 123.6 Fibonacci extension level. The break of the prior resistance at $54.35, however, confirms the dominant bullish trend. So in other words, the uptrend is strong, but like any athlete running a marathon or a sprint pace, some cooling off might be needed before that next leg higher. And let's finish things off for today with the Nasdaq 100, which started the week with, well, a 1% cold plunge, dropping to around 25,170, but it's still up nearly 19% year over year. So what's driving it? Number one, strong bets that the Fed will cut rates in December. Number two, last week's broad tech and retail rally, which gave the index solid upside momentum. Number three, uncertainty surrounding who President Trump will appoint as the next Fed chair, as we are currently seeing Kevin Hassett, Kevin Warsh, and Christopher Waller all reportedly in the mix here at the moment. If a dovish chair is selected, rate-sensitive sectors like tech may continue enjoying investor love. But for now, this index is slightly softer as markets digest last week's gains. Think of it as the Nasdaq taking a Monday morning coffee break. From a chart perspective, price currently sits at 25,170. The index gained 4.7% last week, and current projections are showing a potential move towards 24,634 by the end of the quarter, which also aligns with our next support level, suggesting room for consolidation before the larger trend move. Resistance is also currently sitting at 25,700. So traders, momentum remains supportive for this specific index, but the market is clearly waiting for confirmation from the Fed next week before committing to its next major move. So what should you be watching out for during this course of today and going into tomorrow? Well, we're heading straight into a week packed with private payrolls, rate cut expectations, and a looming Fed leadership announcement. If you think today started on an interesting note, just wait until the markets react to the next hint of who may take over as the Fed chair. Let's just say December isn't easing us into anything gently. And with that, we wrap up your daily market brief, brought to you by ATFX Africa, the broker that gives you an edge in today's markets. Head over to ATFX Africa by clicking the link in the description, and we'll go and experience the difference for yourself. Traders, until next time, stay sharp, stay focused, and trade smart.